So this is the 30-year bonds, and what's going on here is quite interesting. Let's pull this one up. So this is colored, and it's really nice just to see it colored because you can see when you're inside of that period of risk. When you have that rising phase, that shows up as green. When you're in just a standard corrective phase, that's the period in yellow. It goes red when you lose the key weekly cycle low. And you can see if we zoom out on this chart, how really very clear this is. When you lose the key weekly low right here, and now right here, look at that waterfall action on the downside. Right there, and now where we are right now. This is why it's so important to watch violation and then closes below the key weekly lows in any market that you're looking at. Because what has happened in all of these left-hand translations is that you see any little uptick sets up really solid shorting opportunities right there and right here. Right here, it literally went straight down. Right here, look at that one right there. And we had one more small uptick right here that is poised to sell off yet again. So it just says how important this is to watch closely for violations of key weekly cycle lows. And it gives you a great some of the evidence view in terms of what your bias really should be and what the highest odds do favor. And in this case, they still favor lower prices. We are only forming false rallies, meaning bear flags that are getting sold very, very hard on the downside in the ZB market with a weekly low that is only due 1030 to 12.4. We are at that 161.8 fib at around 109. But again, not seeing any kind of sizable buying versus that level. So it's possible at this point that we chop around a little bit, but I would favor it to actually undercut these old lows and then to get the bounce after that. So again, any little uptick here is not likely to hold in the bond market. If we jump over to the daily chart, that was that rally right here. There was a low that was due right around 10.4. Again, it formed on 10.6, had the rally into that falling trend. It got the bear signal on the PO right there, and a quick test down towards these old lows. So what that says is, again, this falling trend is very important, and it comes in 111.07 to 112.31. Upticks into that are really poised for failures and moves back down. There is a low that is due 11.9 to 11.20. And what are our levels on the downside? They come in 107.31 to 106.11 here in the bond market. Again, what would change this is if you now see a move through these old highs at 114.10. Right now, we're not seeing any signs of that, but watch for a sign of change, and that would be for a move through this old high because it would indicate we would form our first higher high. We have yet to see it this entire way down. Lower highs, lower highs, lower highs. Every little uptick formed a lower high. So that is really quite interesting, and it says that you are clearly in a downtrend, and until you see a higher high, rallies are poised to only form lower highs and therefore lower lows.